Good morning, guys. What's up? How are we all doing today? If this is the first time you're on the call, if this is the first time you're joining TN chats, if this is the first time you're mm, coming in contact with my YouTube channel or anything, this is Ryan, founder Ryan FX, and usually today is Mondays, is our TN chats day. Today we wouldn't be having any guests at all, and also I am I'm not turning on my camera today, but stick with me and let's walk through what today is all about. So this is going to officially be episode 7 of the TN chat with Ryan. And today we're looking at, you know, the second quarter market outlook, and we're trying to really understand what's next for Forex stocks and indices. So if you're new to trading or if you've been trading for a while, there are a lot of things you're going to learn from this session. And I know usually people are always wondering, what's this whole thing about first quarter, second quarter, third quarter, fourth quarter. But the truth about it is we are not just trading blindly in the market. At the end of the day, the markets are made up of different participants, okay, coming from banks, hedge funds, multinational, transnational. In stocks, we're going to be looking at companies, and indices, we're going to be looking at baskets and aggregates of different sectors and things like that. Now, due to how each and every of these participants operate in the market, is all going to boil down to what plans they have. Every company has a fiscal plan for the year, basically financial and everything. So they operate in quarters. Okay. So some companies end up releasing, their earnings and revenues and everything for last year during the first quarter. So they have the first quarter to kind of like balance out and, cover up for losses and make profits that they should have made in the early first quarter. That's one of the things that propagates why the first quarter usually is a bit, you know, what should I call it? It seems like it's in a rush. Do you understand? It's because a lot of people are trying to find options to mitigate losses or marginalize profits during the first quarter. Now, during the second quarter, we start to see a more stable market. Now, this is because this is actually when the fiscal year for most companies actually starts to operate. So they start to, operations return back to normally, operations return back to normal condition. So we start to see markets wanting to trend even better. Executions are faster, more risk averse. Nobody's doing anything too risky. So what you notice during this period is you notice that the market is in a bit more of a calm state. So the storm has dropped, and then the markets are trending better. You know, um, this is the period where most retailers honestly make a lot of money because you would start to see retail patterns come back into the market. So you start to see institutions stick by and play by the books. Things like, them using chart patterns, reversal patterns, pure naked price actions, all those retail things start to come back into the market. Now, this is from my own knowledge and study over the course of years. And you can take it from me and you can go back and study it and you'd see it how it's going to play out the second quarter. So in the second quarter, you want to be more fluid in terms of how you view the market. Don't do that whole thing where you're like you're brain locked. You want to keep yourself, or you want to conform yourself to just one idea or one thought pattern or one thought process. Because I see a lot of people, they say, oh, I've learned ICT. So there's this, I trade ICT, I trade smart money, or I trade just this thing. And the truth about it is you in the market, you want to be like water to a very large extent. And you should also understand when your trading system works best, because market conditions are very, very much different and diverse. In fact, if you're going to describe the market, you're going to describe the market as a cyclical environment, because it's different seasons that comes with different waves. Okay, so just the same way some of you who trade Wyckoff, you know that you have the accumulation, you have the manipulation, expansion, distribution, things like that. Okay, that's the AMED kind of system. It's the same way the market works in a cycle. So every quarter comes with a cycle. So let's take, for instance, if the first quarter of the market was consolidating, okay, we might see maybe the second quarter, breakout of that consolidation, then or accumulate during the first quarter. We might see an expansion or a distribution during the second quarter. Then we might get a reaccumulation in the third quarter, and then we might then get market, decide to break out of that accumulation again and start trending in the fourth quarter. So the key understanding to it is knowing what side of the market exactly we are supposed to be on and how to manage and move alongside with the market. Now, the one thing that you do not want to falter in this second quarter is don't try to fight the trend because the trend is usually stronger in the second quarter. So if you want to play pullbacks, do you understand? And you want to trade retracements, make sure you are doing it in the right way possible. You just don't want to trade every retracement you see because the market is going to be strong on trend. Now, let's look at a few things and let's see. So if you remember clearly, I said the first quarter came with a lot of noise and disturbance. So let's take from here. Okay. So this was January. You see how January we pulled into some sort of range here. The market wasn't really giving its best. We're constantly going up and down, moving from support to resistance. So we can as well say we were in some sort of accumulation at this point in time. Okay. And then just right towards the end of the what do we call it? Towards the end of the first quarter, we saw this big push to the upside. And prices did this push and came right back into areas from areas from last year. Okay. We see prices come straight into areas from last year, sweeping out the last key area of liquidity that was present before the end of last year, which was in November, and prices did what start to sell off from that point. And then, like we mentioned, one of the key things we are seeing is a reversal point. Okay, we're seeing prices make a double top at this level just right after taking out that liquidity. And now we are waiting to create more opportunities for sales. Now, why this is so is the one thing you would notice very well about Euro USD, in fact any USD pair, is when market wants to reverse, it tends to use a lot of reversal patterns. It doesn't just jump off and move, especially on Euro USD, for instance. You're going to get things like double bottoms, double tops, triple bottoms, triple tops. You're going to get more advanced type of double bottoms, maybe the double bottoms that look like a market shift, or you see that break of structure to change of character kind of scenario. Those are the kind of things you would notice mostly on Euro USD. And one of the key things as well that you also want to pay attention to when you are trading the USD pairs this period is fundamentals. Now, you might have come across a lot of news and people screaming, talking about fundamentals and whatnot. The truth about it is why the USD is going to be highly fundamental is due to the presence of their new president. That's number one. Secondly, the USD is a home for every other currency. I believe you should know that. And that's why the DXY exists. The DXY as a basket is an aggregate of how other currencies compare to the dollar when the dollar is weak or when the dollar is strong, basically. So there are a lot of things that you need to pay attention to when we're looking at the market, fundamentally. Okay. And one of them being said is you want to not only pay attention to things like FOMC and all of those things, but you also need to pay attention to economic trends. Now, what do I mean by economic trends? When I mean economic trends, I'm looking at, understanding things like, what is happening in terms of wars, aggressiveness of economies, now with Trump imposing tariffs on different countries and all of these things, you need to really understand how do tariffs actually affect countries. Now, the major thing that tariff does and how it affect countries is first of all is tariffs are duties or charges imposed on importation and exportations of goods. Now, in the natural flow and order of things, no country can stand alone because God didn't bless every country with everything. So there's a need for that codependency amongst nations. Now, if, for instance, a nation is building technological devices and everything, and they do not have the microchips and all those things that it takes. They need to build them. Now, in terms of building them, they need to source for other materials that other countries have. So indirectly, in order for them to produce, they might need to import. So let's take Nigeria, for instance. We have enough crude oil, but with the ratio to crude oil that we have, it's like 2 to 10. So we have two working refineries and we have 10 proper wells generating crude oil for us, and we can't refine all the oil. So what we do is we then have to transport or we then have to sell our crude oil to people who have refineries abroad. And then we have to then do what? We then have to bring, or rather, we then have to then do what? So sorry guys, I think my network was breaking. So what we then have to do at that point now is we then have to buy back refined oil. Okay, for instance. Now it's the same thing that happens around the globe. And that's why in the international system, we have something called bilateral trade relations. Okay. I know most people don't know, but I have a bachelor's in international relations. So in bilateral relations now, it means that one country is giving out one thing for another thing, and then they create probably like a comparative advantage between both of them. Okay, give me this, I'll give you this. Give me this amount, I give you this amount. So we equal our scores and we settle our debts and all of those things. But now when you impose tariffs on things that naturally should have an order flow of how we should buy it and we should sell it, it simply means that now for you're making things more stringent for what? For countries who are supposed to be buying these things cheaper from your own side and to actually have a less expensive production. Now, the reason why tariffs are very important at this point in time, it's not like they are a bad thing, you know, it is at the time when the tariffs are actually coming in. Now, the tariffs are coming in at a time in the world where majority of first world countries are actually battling inflation. Now, inflation is I'm trying to look for the simplest way to put it. Inflation is the reason as to why people are able to purchase, spend, and survive. So inflation is that change that happens in the cost of your goods production and services over time. And it's not that it's a bad thing because inflation also shows growth in an economy. Because if your economy is stuck at a position for a long time, it means you're not growing, you know. But we want to, at the same time, we want to also make sure that inflation isn't rising as quick. So imagine countries trying to battle inflation, keep inflation at a low rate, because after COVID, a lot of things has happened in economies and they're trying to keep it, they're trying to balance it out. They don't want inflation spiking too fast, the way it happened in Nigeria. In 10 years, we moved from buying Indomie at 30 naira to buying Indomie at 350 naira for just that small pack of Indomie in just 10 years. Now that isn't growth, that is regression. That was too fast. And the problem why it's not so good is because earnings did not meet up with it. Salaries hasn't changed. Cost of goods are expensive and all of those things. So in order for you to say inflation is good for an economy, everything has to move in accordance. They have to move simultaneously. Do you understand? Earnings have to increase, prices increases, production increases, and all those things. But if one is moving way too fast, then it's bad. So you need to also understand this trend and pay attention to why the tariffs are very important to countries. So if you impose higher tariffs and production gets lower, it means that goods would not meet up with supply. You understand? And all those things. So that's why, in case you've been hearing tariff, Trump's tariff, inflation, this, that, this is just a typical breakdown to understanding why it's important. So how is this going to affect the second quarter? Everything that we need in the second quarter on a normal is that the market should trend as it's supposed to normally. But if for any reason you start to see that there's a shift in the market dynamics and conditions, you need to revert back to your books and actually look and say, okay, what's actually happening fundamentally? Let's look at the fundamentals at this point in time. What is the cause of what is happening in the market? And then you have to be dynamic enough. You have to be fluid enough to start to adjust. So if you come into the market in second quarter having just one mindset, oh, if break of structure happens, if change of character happens, other block, I'm just going to buy, I'm going to sell. You might be disappointed if it doesn't play out that way. So second quarter, prepare yourself for fluidity. Okay, that's the one way you can position yourself. Now, another way you can really position yourself in Q2 is you need to go back to your charts before we get into April, before the second week of April, first week of April, second week of April. This week, I think this week is where ends March, this week and early days of next week. Sit down and pick a few assets that you can look into. Okay. It could be Euro USD, it could be gold, it could be whatever. Okay. But the most important thing is go back to them and start to understand what actually drives this asset. Do you understand? What drives this currency pair I'm trading? What drives this commodity? If you're trading coffee, if you're trading gold, if you're trading Euro USD, whatever the case may be, go back to it and then ask yourself, what exactly is the driving force for what I'm trading? Now study it and understand what makes it react. That's the one way you can also overcome any shenanigans that's going to happen. You need to be confident enough to look at certain peers and say, you know what, I've studied this peer from back and forth, and I know how this peer usually reacts. So if it's during news, let's know what's going to happen and let's know how that's going to happen. Another way you should also position yourself in the second quarter of this year is risk management, because the market is going to be highly volatile. Like I said, we're looking at wars. We're looking at Russia and Ukraine war still hasn't come to an end. We're looking at Israel still launching attacks at Gaza, even despite saying they want to stop the war, they still launch an attack. We're seeing US saying, you know what, we're going to take over Gaza. We're going to keep them in check. We're going to keep them in control. So Israel ceasefire and all of those things. So what does all of this thing have a role to play in for the USD? You know, if whatever actions or decisions they take put the country at harm, it's going to weaken the economy and it's going to make investors scared, and they're going to not want to invest in the economy, and the currency is going to get weaker, because if nobody's investing in the currency and people are pulling out their money, the currency is getting weaker. So all of these things are things that you should pay attention to genuinely, not just because it's a trending thing, but because of your own trading ability. Okay. And you want to refine your trading and get better at it. Another way you can also position yourself very well in Q2 is focus on confluences. Now, when I mean focus on confluences, I'm not just saying your normal strategy and your trading confluence. I mean, be positioned enough to view the market in the normal way of, like they say, retailers. Meanwhile, I would always say it, we are all fucking retailers. Okay. None of us here are smart money. We don't have 2% of what it takes to be called smart money. Do you get? We're just trading based off the concept of trying to understand how the algorithm works, the hedge fund algorithm works, and all of those things. But we're all retailers. So don't just get stuck to your smart money concept and all of those things. Find a balance to create confluence between your normal break and retest, all those things you used to use when you started trading, your trend lines, your chart patterns. Find a significant confluence that merges and creates more confidence for you in your trading in this period. Like I said, in second quarter, I tend to see a lot of market trending, like key markets, normal things that happen in the market. You're going to be looking at things like you're going to find a lot of chart patterns in the market. So if you're going to constantly be waiting for, prices to probably run into an order block or a supply or a fair value or wherever the case may be, it won't always be that way. Okay, it won't always be that way. You're going to see a lot of, trend direction biases and everything. So you need to find confluences. Okay, let's take for instance on XAU USD right now. Remember, if you read what I posted in the group, I clearly stated that we have a lot of short-term traders looking to see how this heads and shoulder pattern at the moment is going to be responsible to start the change in trend direction for gold. But we also see that gold just bounced off a key level at 3,000. Now, 3,000 was the hallmark of gold that we have been anticipating since last year, and we eventually hit it this year. Now, it is only fair enough that a valid resistance should become what should become support from your general knowledge of trading. And prices did what? Bounced off that level and started to buy back all the sells that happened on Friday. Now, is it valid enough for us to still start to say, okay, because this is the neckline, we're just going to sell off, we're going to enter sales from here, and we think the market is going to continue selling? Yes, through that, we have this huge imbalance sitting below 3,000. Okay. And it's also a valid point for you to want to be targeting these areas. But now you also need to understand that gold isn't just an asset that moves, based off technicals alone. It's highly fundamental. The reason why gold kept pushing was because of uncertainties and insecurities in the market. Was Trump's election, everything. There was just too much uncertainty. Now, what can happen? We are at a midpoint and at a junction on gold right now. We can see gold sell off, or we can see gold just continue buying. But you need to position yourself to understand if gold is going to continue buying, what then exactly is going to be the cause of it buying? And if gold is going to start selling, what then exactly is going to be the cause of it selling? And one of the major reasons for me and that I believe is going to make gold probably sell off, even if not now, but maybe stick to 3,050 and start to sell off from 3,050 is, first of all, we are starting to see inflation numbers drop on the USD, meaning that in the long run, the USD is finally showing strength. Economy is thriving, and they are no longer looking for aggressive investors and safe investors right now that have been buying gold, because you need to understand that gold has a beta that keeps the prices stable and static. So it is a hedge for inflation, meaning that in every condition, whatever amount of gold you buy is going to always have value, no matter how high the inflation is in any country whatsoever. So now you see a lot of people starting to buy gold and they were running their money into gold. That's because they're trying to hedge. Now, if the USD is getting stronger, would we start to finally see a lot of investors go back into investing into the USD because the USD is now showing stability? That's what the second quarter is going to lead us into, because Powell, on the other hand, has hinted that if inflation numbers continue to stay, around 2% or just slightly above 2%, anywhere, as long as it's not crossing 2.5%, he's okay with cutting rates. Okay. And if he's cutting rate, then we might start to see stable investors come back into the market, because they're usually not looking for more money. They just need small money. Just that 3% per annum is good enough money for them. It's you and I that are retailers, and we're very, very passive and aggressive investors. We're the ones looking for more money every time. So investors are not interested in high voluminous return. They are more interested in safe returns. You understand? So there's a basket of investment and how they calculate investment. They have risky assets, stable assets, and all of those things in their investment portfolio. And USD usually is supposed to be a safe investment for them, because they want to invest more in the country's bonds yields and all of those things. So they pay attention to those things. So these are a few things that you go back and study and also understand them. You know, I know when fundamentals become a topic of conversation, it's a bit confusing for people. But the truth about it is, you're not You're not trading candlesticks. You're trading economies. So you need to also pay attention to what they are doing, because if you don't, then in the long run, you're just doing this. Let's say you're doing it because you think it's a game, and it really is not a game. You need to pay attention to it. Okay. So here are a few things technically we can look forward to for the week ahead of the second quarter. For gold, like I stated, I'm either waiting for gold to hold this level right now. Okay. I'm waiting for gold to hold this level as it is. And then we're going to go short on gold. And I'm going to be shorting gold back to 3,000 again. Secondly, is if I see gold start to push above the present level of 330 and gold sits on 330, then we're going to be buying gold from 330 back to, sorry, did I say 330? From 3,030 back to 3,050 again. Now, one of the things that is going to make me be comfortable enough buying gold is if fundamentally I find a confluence that states that there's a reason for us to buy gold. But if there's none, then I am going to be selling gold. I'm going to continue selling gold because I expect the dollar to get stronger. Now let's look at the dollar. So that's the DXY. The DXY is how you gauge the strength of the dollar against every other currency. Okay, so if you remember on the dollar, I did mention that we were finally going to be running into we're finally going to be running into buy momentums on the dollar, and that is exactly what we are seeing here. Give me a moment, please. Okay. So I did mention last week during our outlook session that we are going to be seeing bullish momentum come back into the dollar as exactly what we are seeing right now. And what are you noticing here as well? You notice that the dollar is starting to pull some sort of reversal stunt, with us experiencing what a sort of double bottom at this point. But as well, if you put piece by piece your smart money concept and ICT concept, you should see that the dollar for some reason has started to shift. Okay, so where would we say is the perfect time for us to now say, okay, this dollar is finally getting bullish. We want to break and sit comfortably. Okay, we want to break and sit comfortably above 103,700. So we want to experience something like this, and we want to sit on it, this level. So this level is a key has acted as a key level so far on the hourly time frame, not just only on the hourly time frame, but is a key level even on a higher time frame. So we want to experience this resistance level become a solid support level, and then we want to find that confluence as well, and then we want to push and enjoy the buys on the dollar. Now, what does this mean for everything that is the USD as a quote? So we'll start to see things like um we'll start to see things like gold. We'll start to see things like gold sell off because the dollar is getting stronger. So we'll see gold sell off. We'll see likes of Euro USD. Okay. We'll see Euro USD as well. We'll see Euro USD start to sell off too as well. We'll start to get more sells on Euro USD. So if you look at Euro USD on your 4 hourly time frame, like we stated 2 weeks ago, we're expecting that what we get this double top function here, and that's exactly where we are. I said we were going to sell off Euro USD very soon, but we needed it to break this neckline confidently. You see, this was a week here, so it's still keeping this level as a valid support level. So we need to get that push, and I'm targeting this area of imbalance at the stop here for prices to actually buy into this imbalance. And that would keep us within a good candle range of um this sellers here to these buyers here. See, they were liquidated here by sellers again, and then they're supposed to fulfill into a premium point and then sell off again. So that's exactly what we're looking for. So we're going to be looking for entry levels around this area, or we want to wait for what? We want to wait for prices to break this level properly and give us a retest into this level again. And then we're going to start to sell off. So pay attention key levels. Pay attention to where prices are reacting to confidently in this period. Don't just go jumping into every trade and every trade you see. I mean, if you want to scalp, fine and good. That's on you. You want to scalp, or scalp in the direction where the market is finding the most liquidity. The market is going to be highly volatile this period. And one thing is going to be chasing is liquidity. If you do not really understand how to use liquidity concepts, you probably would really need to be in my my upcoming boot camp that is going to be coming up. One of the major things I'm going to be focusing in is how I combine structure, liquidity patterns, and price actions. I don't believe, it should be so hard for anybody. You just need to know where the market is going, why the market is going there, and how the market is going to get there. So just apply those three things: where, why, how. The when is none of your business. You don't need to add when in the market because you can't speculate time in the market. It happens when it wants to happen. It happens when the big players choose for it to happen. But at the end of the day, you just need to position yourself to know why, where, and how. That's all you need to know. The when is not your business. When it happens, it happens. You're going to react. You don't force the time. Okay. So that's that for Euro USD. I think the analysis in second quarter most times are very simple. I think this is one of the periods where even beginner traders will make a lot of money. All you have to do is stick to the trend. If it's selling after every pullback, find a good position, understand your candlestick price action, um, candlestick types, use them, find a good support, a good resistance, follow the trend, and sell or buy, wherever the case may be. You're going to make your money. But you need to remember fundamentals are going to play a major role this time around. We don't have Biden on sit. We have Trump on sit, and he's a madman. So you have to remember that. So we also have GBP USD. GBP USD just came out of its squeeze. Okay, it also was squeezed to the top. I believe if you've been following me for a while, you should recognize this pattern right now. So this pattern is a rising wedge pattern, but on a more bilateral way where it breaks to the downward side. So you can also use it as a reversal pattern, especially when you pair it with prices being at a solid supply or resistance level. So let's see where exactly is GBP USD at. Okay, can we see? So GBP USD is at a key level. Okay, you can see it. So resistance, resistance, resistance. Okay, supports, support. You can see how prices have reacted at this level for a very long time. So that makes that level a very strong level to pay attention to. Okay. And what do we also see? We find this squeeze of this wedge, prices buying all the way, and then sellers eventually come into the market. Now, what do we notice at that level? I'm a candlestick person too as well. So I study candlesticks. You see weak bullish candle, then we see very strong sell candle. So meaning that momentum dropped, indecision here, hanging man. Then we had this engulfing candle. Then we had a momentum candle. So so these buy candles I'm looking at now is just a pullback, probably just to sweep off the liquidity of Friday. We'll probably just sweep it off and then we'll continue the sales. And what is that going to mean for the chart pattern that we're looking at? It means that we most likely would then get what? We then get a retest of this chart pattern again, and then would sell off. You remember on Euro USD, okay? You remember on Euro USD here, one of the major things we spoke about was how after prices broke out of this consolidation here, we had the first touch and then we expected another touch. And that was exactly what prices did before I started to sell, came into this level. So if you look at GBP USD too as well, you might start to, take a cue on similarities too as well, considering the fact that they are positively correlated. I think about 80% of it is correlated, just that the GBP USD is heavier, so it would move faster naturally. Okay. So we might want to see that push to the upside, most likely, if this is the worst case, and if any push is going to happen, and then it will bring us into this area again, and then would sell off from that area. And we're going to be looking at good sells on GU coming all the way back to this broken resistance point at 1.27. 1.27200, 1.27400 area is where we're going to be looking for those sales to come to. Now, if for any reason prices should break above this point, I wouldn't rush into for a buy because I believe that each and every one of us should understand what a false breakout is by this time. So you want to play it clean, simple, and trust what is going to happen. So if we're going to get a breakout, then we should get a proper breakout, not just some sort of one candle breakout. No, no, no. We want to get a proper breakout. A market start trending. Then we'd say, okay, you know what? Why not bearish again? And we have to keep going bullish. But until then, let's watch how the market plays out in terms of coming to this position. And then we'll position ourselves in a very good way to react to the market. No panic, just trusting the market all through. Okay. So that's that for GBP USD. You can use NZD USD too as well. If you're one of those people that trade NZD USD, you can use NZD USD too as well as a yardstick. You see NZD USD already pulling out its own cells. Pulled out their own cells massively already. I know a few people might be positioning themselves for buys at this point because of how the NZD is looking. But yeah, the NZD looks a lot bullish due to the fact that in terms of uncertainties and indecisions of the market, most people would look for safe havens. And the NZD, due to their level of stability right now in terms of inflation numbers and their interest rates, is very calm. It's a calm place for people to want to keep their money. So NZD CHF, also very good place if the JPY is misbehaving and the dollar is misbehaving for investors to look into keeping some of their money. But if you look at the trend overall, you would see that it's actually in a solid downtrend. Okay. And you see that we've hit a key retest level at this point here as well. So if you're going to run into the buys, be careful. If you're one of those people that you're seeing the buys right now, you should absolutely be careful. Okay, don't go fooling yourself. It might not last too long. Probably right into this inefficiency here, and then continue to sell off. It's just going to play the same gameplay as well. So that's that for the USD. Another major pair that we should be looking at is the JPYs. Okay, so correlatively, the USD and the JPY, they have a toxic relationship. They sometimes can be positively correlated in times of distress where other countries are suffering. You might just see the USD and the JPY correlate properly, but majorly they are negatively correlated. And this is why the dollar is a safe haven. It's one thing most people don't talk about, but the dollar used to be a safe haven. Okay, except until when they got into the financial crisis, the recession and everything, and started involving themselves in wars again and all of those things. But before, the dollar used to be a very good safe haven. Now, the JPY as well is a safe haven because it's a growing economy, very, very fastly paced growing economy, meaning that a lot of investors are, poached into it, knowing want to know what is happening, want to be a part of a new a new revolution in the industry and everything. So you see a lot of people going to put their money there. Mind you, their interest rate is very low. I think it's less than 1%, but it's safe because when you put your money, you're not scared of anything. There's no crisis, there's no unnecessary market fluctuations and all of those things. So now how do we pace them together? When the dollar is strong, the JPY is weak. And when the JPY is weak, and when the JPY is strong, most times the dollar tends to be weak. Now you see a lot of buys happening. You can see GBP JPY, CAD JPY, AUD JPY, all of them are pushing to the upside. Now this is a result of the fact that the dollar is getting stronger, and so what's happening now is the JPY is getting weaker. So people run to put their money in the JPY because if you look at it, there's no solid interest rate. You understand in the JPY. So most people who go to keep their money or run to safeguard their money in the JPY, it's just so that nothing happens to their profits that they've made so far, or nothing happens to their principal. But when the dollar, which on the other hand is a good investment with good interest rate, starts to do better, they would start to pull out their money. So when they start to pull out their money, what's going to happen to the currency of the JPY? It's going to start to get weaker because people are now pulling out the tons and thousands and millions of money that they've invested and going back into the dollar. So you would see a gradual shift of monetary purpose from the JPY into the USD. Okay. Said really saying a lot for you guys today, but I'm glad that each and everyone on the call is learning. If you're on the call and you're learning, just just leave something in the chat section. Let me be sure that we're following. And sometimes I forget that I have to post this on my YouTube. So if this is your first time coming across this video and you're coming to my YouTube, please don't forget to like, share, and subscribe and continue to be a part of this and always be in attendance with it. Okay, and it's TN Chats with Ryan again. So yeah, so you need to create an outlook that allows you pace yourself to see the change in dynamics of market. So in terms of the JPY, honestly, we're still going to stay bullish. You can see the market constantly making series of higher highs. I saw these lows last night, but I was too sleepy to even pay attention to them because I was up to like two. But then I have this opening range of where market opened. Okay, so I'm expecting that um the London kill zone, which is the brunch time before the New York Open, probably like around 1 p.m., should sell off the GBP JPY into this opening range of yesterday and then would find more buy positions. Where would my target be exactly, and what views do I have on GBP JPY? I remember clearly, if you've been following me and even on my Twitter, I kept screaming that 187 is a must and 185. We didn't get to 185. And I feel one of the reasons we didn't get to 185 on GBP JPY was due to the reaction of other JPYs. They have to flow together. Others made their point to this level on other JPYs, but GBP JPY didn't work. So basically, it just used the liquidity sweep criteria to continue its move to the upside. Okay. Now, to be honest, the next place that JPY is really coming back for is we're going to finally see 200 happen. 200 has been a point I have been waiting for all through the start of the year. Okay. We are finally going to see 200. And when 200 happens, you can come back to me. If it doesn't happen, you can come back to me. Like I always say, have something you believe in, be courageous enough to say it, be courageous enough to do it. If it doesn't work, it doesn't work. If it does work, it does work. Be be ready to accept your fall and accept your glory at the end of the day. Okay. Don't be ashamed of it. So 200 is a must. And the moment I see GBP JPY sit above 194 again, I would aggressively continue to scale into GBP JPY till we get to 200. Okay. Another pair I have in sight, I sent analysis to the group, is the CAD-JPY. Okay. CAD-JPY just started its own move. Okay. CAD-JPY just started its own move. And the reason why it's just starting is due to tariff concerns between Canada and US, and they've been struggling. And you see how it's respecting. So the one thing I'm looking for is entry criteria. And I had a lot of people asking me, oh, can we enter it now? Can we enter it now? I'm like, nah, we're not going to take the trade now. So I want to see prices pull back as well into the opening range. Okay. If I get prices pull back into the opening range, then I would buy from that point. But nonetheless, what I was really waiting for is for prices to actually sweep this liquidity to create a new higher high and confirm the bullishness of this market. So we'll then have a higher high and a higher high that took out previous character, and then a low, and then a new high, then we get a new low. That would be a very solid confirmation. So now we know we are bullish because we now have one, two, three, four higher lows to the upside, and now we're now solid for the buys. Okay, so that's what I'm waiting for. But if I can get a pullback into the opening range of yesterday when the market opened, then I would definitely be focused on buying the CAD-JPY to the upside. At the same time, we also need to understand that the Canadian economy too is in a bit of a shuffle. You see them having issues with their prime minister, their economy and everything as well. So you want to pay attention to that as well. That's one of the things that would decide how slow the market moves or how fast the market moves. Is it just automatically going to change the direction of the market or the condition of the market? No, not necessarily. But in the long run, it would affect it if it's moving slow or if it's moving fast. So, like we say, pace yourself for what is coming. Now, the one thing I completely forgot to talk about, putting it at the end here, is you want to pay attention to macro releases like FOMC, CPI, employment changes, jobless claims, unemployment claims, whatever. You want to pay attention to them. They're going to be very useful to you in this second quarter because the more jobs we get, inflation numbers drop and we get more jobs, oil is definitely going to cut rates. So short term, you get aggressive investors running to the market selling dollar, but it's really just a pullback. The dollar is still going to be strong. Okay. So we're going to see some of that happen. Now, how would this affect stocks in general? Now, you notice something happened in the first quarter. We saw the dollar fall, we saw stocks fall. They are going to have to go back and create a divergence. So they would have to buy together till they get to a point where the divergence realigns again. Because normally, if stocks are buying, the dollar is weak. If the dollar is buying, stocks are weak. But this time around, we saw a panic in the market. And after such panic happens, we would need time for markets to actually rearrange itself and go back into its natural variance. So that's one of the things that we're going to be waiting to see. But on stocks, I am bullish on stocks. Honestly, I feel like a lot of investors are going to come back to start buying their stocks back. And I sent this analysis out on Nasdaq. So I'm expecting to see the Nasdaq continue to buy to the upside. And most likely, depending on how the markets move, we would come into this level, first of all, and see if this level is going to hold off market again and push them back. If it doesn't and we break above it, then we're definitely going to see the market continue to trend to the upside, and we most likely will see a new higher high over over a long time or a long run. But remember, it's Nasdaq. Nasdaq can just decide to do 2,000 points in 2 days, okay, and it will just fly and Otilo. But we're going to key in our positions as well with time. Let's just see how the market works. Like we've broken out of this consolidation now, right now. This candle has broken out of it. So I would expect that spiral to the downside and then to continue to rise again. And I would be calling these trades, I would call some on the free channel, but majorly of them are going to be called in my basement, which is my VIP. I call it a basement because that's where I literally will share all my thoughts with people there and everything. So that's where most of them are going to be called and pasted. So if you're on the call and so far so good, you've understood everything that I'm saying, I am happy about that. And I hope we continue to bring you this amount of value every week, week in and week out till the end of the year. It's not easy. Sometimes I get tired myself. But yeah, that's it, guys. And as always, is Ryan for a reason. So if you have any question whatsoever, you could leave it in the chat section, and I have 3 more minutes to answer your questions. And if you were able to grab a thing or two and you learned a thing or two, just say I learned in the chat section with the fire emoji or any emoji. Thank you, guys. Okay, someone is asking, what does it take to be in among the basement? Honestly, the basement isn't just your regular VIP. It's basically opening. So probably when I decide to give a new opening, it take maybe like 5% or 5 to 10%, depending. Honestly, I just don't like crowd. Okay, so when I have an opening, I would make sure I let everyone know so you can be a part of the basement. Okay, thank you guys. Yes, you have to pay to get into the basement. It's not so expensive, honestly. It really isn't that expensive. Okay. I would let us know what the criteria is to get into the basement when the time is right. Hopefully by the end of the month, as the start of the second quarter is opening, I would open up more slots. I would open up more slots. Trust me, it's not it really isn't up to $50, honestly, and it's monthly, but it's not up to $50. I'm not going to say the price exactly, but if you go back to my channel, scroll up, you should see a message concerning it. It's not up to, and it's monthly, not really monthly, but 5 weeks. It's 5 weeks after every 5 weeks. So yeah, that's what's up. And I would see you guys on Wednesday during our Wednesday Outlook session. I'll drop the link to that on Tuesday night. And until then, I would see you guys and I wish you guys the best of the week. And I pray that the month ends with profits for us to be able to handle our bills and flex and flange as we want to. Until then, I'll see you guys same time, same place next Monday. We'll have a guest coming in next Monday. We're going back to normal routine of having guests. And it's amazing having this call with you guys. The turn up today was beautiful. And until then, is Ryan for a reason, baby. Bye, guys.